are you staying away from banks and auto right now? Or are you seeing opportunity here?
No, I think banks is that one elephant in the room that wants to dance, but is not getting a chance to dance, right? I think most of the private sector banks, Tamanna, I think if you look at the valuations from IndusInd Bank to say ICICI Bank, most of these guys, and if you throw an SBI in the middle as well, they're all going at 1.5 to 2.5 times price to book. I don't think that's demanding at all by any stretch. I think at the peak, these banks have traded anywhere, barring SBI, of course, they've traded anywhere between 2 to 4.5 times. So is there room for these banks to re-rate on the way up? Of course there is. But I think what's happening in the system is deposit mobilization is still a challenge. I think you're still seeing banks on a case-to-case basis that are actually raising deposit rates, even though we've been discussing rate cuts.
Rahul, if you're talking about the elephant that is not able to dance, does HDFC Bank have two left feet?
Well, it's our biggest buy call, and we have almost, a 30-35% upside on that name. And I think ever since the merger, obviously there have been operational, synergies and things like that that have played themselves out, but nothing that HDFC Bank had not guided for during its process. Maybe some of it was a little more accentuated than analysts expected. But, at what? It's been trading at between 2.5 times for some time right now. I think it's still a bank that's going to grow at 20% on a blended basis for the foreseeable future. If you just start seeing, structural evidence of, probably a 20% kind of growth along with margin expansion, I think, the trade will probably shift back. I think people want to own this name. It's been a darling of the market. And like I said, both HDFC Bank or HDFC Life Insurance, which has traded as much as 4.5 times price to embedded value at its peak, are to us screaming buys right now. It's just a question of under ownership and when the price, when performance returns to match market expectations. I mean, you were discussing DMart a few minutes ago, Titan. These stocks are priced to perfection. Asian Paints, you really don't have too much room for error. And HDFC Bank was that kind of a stock when it was trading at 4.5 times. But at 2.5 times price to book, if you're going to have an entity that's growing at 2% or 20% with margin expansion and not too many concerns on asset quality, I think it's just a matter of time before money finds itself, not just to HDFC Bank, but I think the sector at large. I think there is a case for about a 20-25% valuation reset. It's just a matter of time before it happens. And I think, the problem with this, Amina, is when it'll happen so soon. So if you're not owning these names at that point, you'll probably miss the rally. So I'd say it's better to be a little earlier in banks because these are very high quality franchises, then try and catch the up move because these stocks will probably move 20% in a week, 10 days. And if you're not owning them, you'll probably feel left out. So from our vantage point, we'll probably be ascribing an overweight on this sector, not just large caps. You were discussing Federal Bank. That looks like an interesting one. We'll be buyer on dips. And even some of the housing finance companies, gold finance, I think we like something like Muthoot. We've recently initiated a couple of months back on Housing Urban Development Corporation. So there are lots of these names in the entire BFSI sector that look interesting where valuations are not demanding. And that, I think, will be probably our number one overweight sector in the market as of today.